Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. The title of this video is a first step to mastering the wave account. In this video, I'm going to show traders the first step that they must follow if they're going to start a wave account, if they want to become a better wave a trader. What are we looking for? The first steps, to wave accounts, is the understanding of the market patterns. Now, I did not say price pattern. I did not say Elliott wave pattern. I did not say Fibonacci patterns. I say market patterns. There are three market patterns. The horizontal channel, when the price consolidating, is what we call a market pattern. This is the first market pattern. We also call it a balanced market, when the price oscillating between one level and another level. The next market pattern is the rising channel. I did not say a vertical channel. I say a rising channel, a diagonal channel like this. Because the vertical channel is not a market pattern. When the price is displaying higher lows and higher highs in a rising channel, this is the second market pattern. The third market pattern is the declining channel. When the price or a financial instrument is displaying lower lows and lower highs. That's it. Three market patterns. So in order to count wave correctly, one must understand or apply the market patterns. One of the mistakes that the wave traders are making, they are violating the market patterns. Alright, very important. So before we start counting wave, the first wave is the wave that we want to identify. So the first step to master wave count is to be able to identify correctly, accurately, the first Elliott wave. If you count wrongly, the first Elliott wave, you are likely to count, the second and the third and the fourth and the fifth wave wrongly. So it is crucial that we are able to identify correctly the first Elliott wave. This is the first step to mastering the Elliott, the wave counts. So when we want to count the first wave, we are looking for the horizontal market pattern. Here you see. So the first Elliott wave, the characteristic of the first Elliott wave, one of the characteristics of the first Elliott wave, is more than 70% of the time, it will break out of a consolidation zone. It will violate, the horizontal market patterns. So, without talking too long, and to avoid that this video is too long, for this stock, Biogen IDEC Incorporation, listed on the Nasdaq 100, Epic Bravo India Indian Bravo. Though we are using a stock here, this strategy is valid for stocks, for futures, for forex, for ETF, for gold, and for silver, for any financial instrument. So we see a consolidation here. In fact, this stock was consolidating since the year 2000 up to the year 2011. Almost 10 years, this Biogen IDEC Incorporation was consolidating. This is a balanced market. This is the first market pattern. As an Elliott wave trader, when we see the price violating the the horizontal market pattern, we know that there's a high chance this may be, okay, the first Elliott wave. So I've done my homework already. The first Elliott wave is from here to this point here. From here to this point here. One of the characteristics of the first Elliott wave is that when it breaks out of the consolidation zone, it must break above a resistance level, substantially above the resistance level on the left-hand side. So if I call this, for instance, the first Elliott wave, I'm looking on my left-hand side to see whether my first Elliott wave, okay, has violated the resistance on my left-hand side. Yes, it did. You can see here for the first time it breaks above, okay, this consolidation zone. But look, the candlestick pattern, it was, okay, an inverted hammer followed by a doji. You do not see a first Elliott wave ending with, okay, an inverted hammer or a doji. This is uncertainty. So you need to understand also, okay, the candlestick pattern given by the specialist of candlestick pattern is Nixon, okay? Nixon, okay, look for it on YouTube, search for it on YouTube, on Google. Nixon is a specialist of candlestick pattern. So this is not a valid first Elliott wave. And also looking on your left-hand side, okay, if I draw another line here, you see the high of this candle here, we are on the monthly chart. You can see that the high of this candle here, where my cursor is, the price, you see, went above it a little bit. So it breaks above it, but closed exactly on the dot on it. So it did not violate the resistance on the left-hand side properly. So if you were counting this as a first Elliott wave, we need to put a big question mark on it. So you label this as a first Elliott wave. You must have some reservation concerning, okay, the identity or the validity of this first Elliott wave. And finally, the price breaks above all the resistance on our left-hand side here, confirming to us that this is likely to be the first Elliott wave. This is the first step, okay, to mastering the the wave counts. When it comes to Elliott wave or Elliott wave theory, Elliott wave strategy, or how to count wave, I do not have any secret. I share everything with traders. Why? Because in an orderly market, most market participants are rewarded. In this scenario, we also know that the wave principle is a fractal principle. So a wave counts on a one-time frame can be a minor wave on a higher degree, on a higher time frame. In this case, our first Elliott wave has started here and has been divided into 5 minor waves. First minor wave, second minor wave, and the third minor wave, followed by the fourth minor wave, and the fifth minor wave. This is a complex first Elliott wave. I always follow the same strategy on any time frame when I am about, okay, to count Elliott waves. And this is a valid guidelines that we recommend to traders that want to master, okay, the wave counts. All right, you see now, it makes sense, and it is also powerful. So to become a better wave count, the first step is to understand the market patterns, all right, and also the characteristic of the first Elliott wave. If we do not understand the characteristic of the first Elliott wave, we are likely to make a lot of mistakes. If we count wrongly the first Elliott wave, we are likely to count the second Elliott wave also inaccurately. It is important to get the first Elliott wave correctly. There are other rules that we also follow that I will be discussing with traders in the other videos, okay, about the wave count. So you can see here, this is the first minor wave, second minor wave, third minor wave, fourth minor wave, and the fifth minor wave, okay, on this monthly chart. They move from here all the way here. This is the first Elliott wave, which has violated the consolidation pattern, the market pattern, the horizontal market pattern. All resistance on our left-hand side has been violated. The price breaks above the resistance level. If you were in a downtrend, the first bearish Elliott wave must break below all the support level on our left-hand side. All right, you see now? So by following these guidelines, we will always be able, to identify a valid first Elliott wave. We know also that the move, I will tell traders now that the move, from, this point where my cursor is, all the way to the target level at $317. This is the third Elliott wave. All right? But a wave on the monthly chart can be a minor wave on a higher time frame. All right? In fact, on the yearly charts, the first Elliott wave, as you can see here, there was a consolidation here again on this monthly chart. And then we have, a breakout. The price move above this. You see this section here, the consolidation. Can you see on your chart the consolidation here? And the price breaks above it. This is, a first Elliott wave. This move from here to here. This is the first Elliott wave, on a higher degree. All right? It's the first Elliott wave on a higher degree. But the move that I show you here, from here to here, all right, this is the first Elliott wave, on a lower degree, because, in fact, the third Elliott wave has started from here, but that third Elliott wave has been divided into 5 minor waves, will be divided into 5 minor waves. It's not yet completed, but I will not dwell on it, because the purpose of this video is to show traders the first step to mastering, the wave accounts. If you want to know more about the Elliott wave, you must go to our website, www.24elliottwaves.com, and also on our YouTube channel, www.youtube.com/user/24elliottwaves. www.24elliottwaves.com, that's our website, www.youtube.com/user/24elliottwaves. That's our YouTube channel, where we are busy sharing our wave count experience with traders. A lot of traders get into trouble when they are counting the wave, but because they do not understand the market patterns, and they do not understand what is a trading drill. All right? There are guidelines that the professionals are following all the time, and this allows the experts to make excellent, wave accounts. So to summarize this video, if you want to master, the first step to master wave count is to understand that we have 3 market patterns. The first Elliott wave, very often, 75% of the time, will break out of the horizontal market patterns. The first Elliott wave will also violate all resistance on the left-hand side. It must be bullish in the uptrend. It must be very bearish in the downtrend. This is the first Elliott wave is the signature of, the bulls in the uptrend is the signature of the bear in a downtrend. There is a normal first Elliott wave where the price will just go in one move, like this, which means it breaks out and runs in one move. But there is also what we call a complex first Elliott wave, when the first Elliott wave is divided into 5 minor waves. This is a complex first Elliott wave. I hope you have learned something from this video also about the first step to mastering the wave count. I invite you now to follow me in the next video when I will be discussing with traders, okay, the second step to mastering the wave count. I hope you have learned something on this video and we put into use, okay, to make excellent day or swing trading decision. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders. Speak to you soon.